Apple held a conference call and reported quarterly financial results, and it included many things that Apple stock investors need to know about, but they were unlikely reported on by other major media outlets or other YouTubers because the things I'm going to share with you in this video requires actual reading of the transcripts and actual financial analysis, which is tedious, and many other providers of financial data and news don't like to go through all the details. They just like to pull out the big picture headline numbers like revenue and earnings per share and leave out all the critical details. Thankfully, I read all of these conference call transcripts and I pull out critical information that I feel is important for investors like yourself to make informed financial decisions. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Apple's operating cash flow remains strong at $24 billion in the most recent quarter. Annualized, that reaches about $100 billion. But you can't really annualize Apple's most recent quarterly figures, nor can you do that with any quarter for Apple because Apple's business is highly seasonal, meaning that one quarter out of the whole year is much larger than the rest. So it doesn't have even production, it doesn't have even sales throughout the year. The holiday season is Apple's most popular season in terms of sales and profits, or largest in terms of sales and profits. And so you can't annualize a quarterly figure, even when it's lower, like the most recent quarter, or when it's higher during the holiday figure, because that wouldn't be an accurate assessment of the company's annual figures. Now, iPhone upgrades grew double digits year over year, and that was a positive signal. Apple has a large established base of users in the iPhone ecosystem. It's critical for Apple to continue to retain these customers so that they can keep them in the ecosystem, keep them involved in the services that they offer. Now, during the March quarter, iPhone was a top-selling model in the US, urban China, the UK, Germany, Australia, and Japan. That's also good news for investors to see that Apple's products are leading products in many major countries around the world. Now, Apple boasts one of the highest customer satisfaction ratings in the world for its products, and customer satisfaction in the US came in at 97%, according to 451 Research. Now, this is important, and if you read my book, you'll know that my investing framework includes 6 things that I look at. And one of the more important things in my 6-step framework for evaluating stocks is the customer value proposition. How good do customers feel like the value they're getting from Apple? How highly do they rate Apple in that regard? And there are several metrics you can look at to judge that customer value proposition. And one of the metrics you can look at is customer satisfaction. And that tells you that customers that buy Apple's products feel like they're getting a really good deal at 97% satisfaction rating. And the reason why that's important is because if customers feel like they're getting a really good deal, they're likely to stay with the brand. They're more likely to stick with an iPhone when the time comes to change their phone or to upgrade to a newer phone. They're more likely to stay with Apple and buy that new iPhone. That means also that every new customer that Apple attracts has a much higher lifetime customer value because they're going to stick with Apple for a longer time period. It's not just that initial sale that Apple benefits from for a new customer. It's those repeat purchases over the lifetime. It's those incremental purchases over the lifetime. And one of the ways you can estimate what those incremental purchases, those repeat purchases are going to be is by looking at customer satisfaction ratings. Now, Apple's services segment is one of the more attracting reasons to be bullish about Apple in the long term. And the services segment has gross profit margins over 75%. And more importantly, most of the services revenue, or a large percentage of the services revenue, is recurring in nature. Apple has over 1 billion paid subscription across the services on their platforms. That means every month Apple just bills these customers and generates that revenue. services customers that are on subscriptions are more profitable and more lucrative for Apple in the long run. It also again signals the value that Apple provides customers to be able to attract 1 billion paid subscriptions. That's the largest number of paid subscriptions I've seen out of any company that I follow. And I follow over 200, 300 companies. So this is very impressive from Apple to be sure. Another thing I like about Apple and its management team is that they don't go around talking so much about feeling like their company stock is undervalued. They just go out and spend billions of dollars buying back their shares. Now, if you thought that something was incredibly undervalued, I think that's what you would be doing, right? Instead of like going around and trying to tell everyone else that you think something is undervalued, you would go out and buy up as much as you can quietly without letting anyone else know. Because if everyone else knows that this thing is undervalued, then they would start buying it and the price would increase and you wouldn't get a chance to buy up as much, right? And so that's what I try to share with investors when I hear companies like Tesla and Palantir and other boastful management teams that go around talking about how much they feel their business is undervalued and how great their long-term prospects are, but without going out, especially for Tesla's sake, without going out and buying back their own shares, right? If they really thought that these shares were undervalued in Tesla's case, wouldn't they be going out and spending billions of dollars buying back their stock? They have over $30 billion on the balance sheet. They don't have very much debt. They have the ability to buy back stock, but they're not doing that. Do they really think the shares are undervalued? I don't know, right? I'm skeptical of those types of management teams that go around trying to boast and lift up the stock price just with words and not actually buying. But that's for years. Apple has been just quietly buying up billions and billions and billions of dollars. In the most recent quarter, they bought back $25 billion worth of stock, and the board authorized an additional $100 billion for share repurchases. This is the strongest signal that management can send to me as an individual investor that they feel their shares are undervalued. No amount of words can make up to me what is actual dollars going out and purchasing shares. In fact, the value of these purchases is even greater in my eyes when the company is not going out and talking about how much they think their shares are undervalued. It tells me that they want their share price to remain low, or they don't care if the share price remains low. It just means that they'll get to buy back more shares at these lower valuations. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.